America, the land of opportunity, is facing a stark reality. The gap between the rich and the poor is widening at an alarming rate. The year is 2025 and the economic landscape is fraught with uncertainty. Rising inflation, trade wars, and a volatile stock market are creating a perfect storm, leaving many Americans struggling to stay afloat. On one side we see the wealthy elite, their fortunes seemingly immune to the economic turmoil. They navigate the choppy waters with ease, their wealth growing even as the economy falters. On the other side, we see working families struggling to make ends meet. Their paychecks are stretched thin, their savings dwindling as the cost of living skyrockets. This isn't just a story about numbers, it's about real people's lives. It's about the single mother working 2 jobs to put food on the table, the elderly couple forced to choose between medication and groceries, and the young college graduate drowning in student loan debt. The American dream is slipping away for far too many. It's time to understand the forces driving this economic divide and explore strategies to bridge the gap. It's time to rewrite the narrative and create an economy that works for everyone, not just the privileged few. Inflation, a word that sends shivers down the spines of economists and consumers alike, is back with a vengeance. In 2025, it's not just a theoretical concept. It's a stark reality hitting the wallets of everyday Americans. Simply put, inflation is the rate at which prices for goods and services rise over time. It's a silent thief eroding the purchasing power of your hard-earned money. What you could buy for $100 a year ago now costs $104, or even more. For those living paycheck to paycheck, this means tough choices. Essentials like groceries, gas, and rent are becoming increasingly unaffordable, forcing families to cut back on basic necessities. The rising cost of healthcare adds another layer of stress, pushing many into difficult financial situations. The wealthy, however, are often insulated from the worst effects of inflation. They hold assets like real estate and stocks, which tend to appreciate in value during inflationary periods. In fact, inflation can even work in their favor, increasing the value of their holdings and widening the wealth gap. Trade wars, often touted as a tool to protect domestic industries and create jobs, have unintended consequences that ripple through the economy, exacerbating the divide between the rich and the poor. In 2025, the trade war initiated years earlier continues to cast a long shadow. Tariffs, essentially taxes on imported goods, have driven up prices for consumers. From electronics to clothing, everyday items have become more expensive, disproportionately impacting low-income households who spend a larger portion of their income on necessities. While proponents argue that tariffs protect American jobs, the reality is more complex. Many businesses, large and small, rely on global supply chains. Tariffs disrupt these chains, increasing costs for businesses and potentially leading to job losses. The wealthy, with their diversified portfolios and ability to shift investments, are better positioned to weather the storm of trade wars. They can invest in companies that benefit from protectionist policies or move their money to more stable markets. The poor, however, bear the brunt of the economic fallout. The stock market, often seen as a barometer of the economy's health, has been on a roller coaster ride in recent years. Volatility, fueled by geopolitical tensions, trade wars, and economic uncertainty, has become the new normal. For seasoned investors with deep pockets, market downturns present buying opportunities. They have the resources to ride out the dips and purchase undervalued assets. These savvy investors understand that the stock market is a long game, and short-term fluctuations are par for the course. However, for those with limited savings or approaching retirement, market volatility can be terrifying. They may be forced to sell at a loss, jeopardizing their financial security. The fear and uncertainty surrounding the stock market can create a sense of panic, leading to poor investment decisions. Section 5. The rich get richer, how the wealthy capitalize on volatility. The old adage, the rich get richer, rings truer than ever in today's economic climate. But how do they do it? How do the wealthy not only survive but thrive during times of economic uncertainty? One key factor is their understanding and utilization of financial instruments and strategies that are often inaccessible or too complex for the average person. They have access to financial advisors who guide them towards investments that offer the best returns. Moreover, the wealthy possess a higher risk tolerance. They can afford to invest in volatile assets with the potential for high returns, knowing they can absorb potential losses. This ability to take calculated risks allows them to capitalize on opportunities that others cannot. Finally, the wealthy understand the power of leverage. They use debt strategically to amplify their returns. For instance, they might take out a loan to invest in real estate, using the rental income to cover the mortgage and generate profit. Section 6. Investing in appreciating assets. Building wealth that lasts. One of the most effective ways to build wealth is to invest in appreciating assets. Assets that increase in value over time. These assets act as a hedge against inflation, preserving and even growing your purchasing power. Real estate has long been a favored investment for building wealth. Whether it's a primary residence, rental properties, or commercial real estate, owning a piece of land has historically been a reliable way to grow wealth. Stocks, representing ownership in publicly traded companies, offer another avenue for wealth creation. While the stock market can be volatile, over the long term, it has consistently trended upwards. Investing in companies with strong fundamentals and a history of growth can generate significant returns. Commodities such as gold, silver, and oil are raw materials that are essential for the production of goods. Investing in commodities can provide a hedge against inflation and diversify your portfolio. Section 7. The power of diversification safeguarding your financial future. Diversification is a cornerstone of prudent investing. It's the practice of spreading your investments across different asset classes, industries, and geographical regions. The goal is to reduce risk. Imagine putting all your eggs in one basket. If that basket falls, you lose everything. Similarly, if you invest all your money in a single stock or asset class and it performs poorly, your entire portfolio suffers. By diversifying your portfolio, you reduce the impact of any single investment on your overall returns. If one investment performs poorly, others may perform well, cushioning the blow. Diversification helps you weather market fluctuations and achieve more consistent long-term growth. Section 8. Financial literacy. Your key to unlocking financial freedom. In today's complex financial landscape, financial literacy is no longer a luxury, it's a necessity. Understanding basic financial concepts such as budgeting, saving, investing, and debt management is crucial for navigating the economic waters and making informed decisions about your money. Financial literacy empowers you to take control of your finances, build a secure future, and achieve your financial goals. It equips you with the knowledge to make informed choices about spending, saving, investing, and managing debt. Fortunately, numerous resources are available to enhance your financial literacy. Books, websites, workshops, and online courses offer valuable insights and practical advice. Many financial institutions provide free educational materials and tools to help you manage your money effectively. Section 9. Navigating the economic storm strategies for a brighter future. The economic landscape of 2025 presents both challenges and opportunities. While the widening gap between the rich and the poor is a cause for concern, there are steps you can take to navigate the economic storm and build a brighter future. First and foremost, invest in yourself. Acquire new skills, pursue higher education, and adapt to the changing job market. A strong educational foundation and a commitment to lifelong learning are invaluable assets in today's economy. Second, embrace innovation and technology. The digital revolution is transforming industries and creating new opportunities. Stay informed about emerging technologies and explore ways to leverage them to your advantage. Finally, advocate for policies that promote economic equality and opportunity for all. Support initiatives that address income inequality, provide affordable housing and healthcare, and invest in education and job training. By working together, we can create a more just and equitable society where everyone has the chance to succeed.